Okay, so we are going to learn what um hedge trading. And hedge trading is what is another way you can protect your funds, or you can protect your trade from getting what liquidated. When you have been, like, when you learn forex, the teachers will tell you, do not short and long the same coin at the same time. Why? Because at the end of the day, your net profit will be what? Will be zero. And so that is what hedge trading does. It allows you to buy or long a particular asset, and at the same time you will short that same asset. And why? At the end of the day, you are what? You neither lose or you gain. However, however, it is what? A great tools for those who knows how to use it. So we are going to learn how to do what? Hedge trading. So if you go to the futures, you open your Binance account. You open your Binance account. At home, you go to futures. You go to futures. You click on futures here. Then you have to what? Set your trading tool or your page to what? You have to set it to hedge mode. You have to set it to hedge mode. Currently, I'm using hedge mode, so I'm going to show you how you set yours to hedge mode. All that you have to do is to click on on the menu or the three dots on top here. Then you go to preference. You go to preference. So with the preference, we have what? Position mode setting. Position mode setting. That is where you find what? You find hedge mode. So we have one way. With the one way, you can only enter a trade with what? With only one direction. That is, you either short or you long. Then with the hedge mode, you can what? You can long and at the same time short a particular asset. The same particular asset, you can long it and you can short it. So if you read what is written here, if you read what is written here, if you read what is written in hedge, a symbol supports simultaneously holding long position and what? Short position, and the unrealized profit and loss can be offset between the two positions of that symbol. So you will be able to do short and long at the same time. So now this is how the interface of the hedge mode looks like. You have what? You have open and you have close. So this is open and this is what? Close. So the open is for what? For you to enter a trade, and the close is for you to what? To exit the trade. So under open, we have long, then we have what? We have short. Then when you go to close, we also have what? Close long and what? Close short. Close long and close short. So let's say we want to enter the market. We want to enter the market. We search for a coin, let's say Gala coin. We are going to trade Gala coin. We are going to trade Gala coin. Good. So maybe we want to what? We want to enter Gala. We want to enter Gala for long. Then we want to enter for short. And why are we doing this? Because we don't know the direction that it may go. So we are trying to protect our trade. And that is the meaning of what? Hedging. You are protecting your trade. So let's say we want to enter for long. So this one I'm going to do an illustration for us to see how it works before I'll give you the strategies involved. So let's say I will long, I'll put 10 USDT on 4x. I've clicked on the long, it is working. Then I'll put short. It's also working. So this is what? The trade. We have Gala long, then Gala short, Gala long and Gala short. And you could see the unrealized profit and loss is what? Is moving simultaneously. So with this, the liquidation prices are almost the same, meaning when you are here, you will never what? You will never get liquidated. So with the hedge mode, you have what? Place to trade on the same asset but different direction. So what are the strategies involved in this hedge trading? So let's say particularly we want to what? We want to long Gala. That is our main direction that we want to go. We want to what? We want to long, or we want to predict that Gala will go up. Good. But then we enter with this hedge. That is what? We want to see where Gala will retrace. Where Gala will retrace. Then we enter the market fully. So if you want to hedge, you don't put much funds there. You are trying to take advantage of what? Of one particular direction. So let's say Gala, we are not so sure, but then we expect Gala to retrace to, let's say, 0.5850. But we are not so sure that it will come there or where it will move. So maybe we have entered and we are what? We are using the hedge to what? To check for what Gala will do. So if the short gives us, let's say, a profit and the long is giving us a negative value. For currently, let's use what we have done here. The Gala long is what? Yes, now the Gala short is giving us profit. Then the long is what? Is giving us loss. And with this strategy, our direction is long. So what we are going to do is that when Gala moves by, let's say, 10% profit in short, 10% profit in short, it is a signal for you to know that when you also go in for long, you can equally get what? Get that 10% profit. So what that you will do is that when you are back, you close the one which is in profit. You close the one which is in profit. Then you enter fully with what? With your expected trading capital. then you leave it. So as the loss accumulated is what? Is moving up, or you are burning more loss. Ideally, you are what? You are getting more profit. So that is how we use the hedge. So for this strategy, you are using the hedge mode to get what? To get a signal to set up a trade call. Secondly, let's say you are in a trade and there is a high volatility. Maybe we entered long, just like this one. We entered long, but then we didn't hedge it at the beginning, and we saw that it is coming down. We saw that it is coming down. Maybe yes, it is coming down and you are in a loss. So instead of you to what? To continue losing, you quickly place a hedge entry. That is, you short it. You short it. And meaning that from that point, if it continuously to dip, you are what? You are not going to be affected by that loss. And you are going to make what? You are going to make profit when it changes to your direction. But you have to take note. You need to know where you put your stop loss with this strategy. Maybe you still want to what? You still want to go long. So immediately it is moving in your favor. It's either you set a target or an entry zone or zone of interest, that support resistance, that whenever Gala reaches there, that place, I'm sure that it will bounce. So you do what? You close your short position. Then you can use that funds to even support what? Support your long position, and you what? You move up. And so with that strategy, the hedge mode have saved you from what? Further losing on that particular trade. On that particular trade. One thing to note is that with the hedge mode, your leverage should be equal. You cannot set one leverage higher above the other. So this one, the leverage is equal. Even if I adjust leverage, let's say I will adjust my leverage to 10. So I'll adjust my leverage. Automatically, the leverages will change. So you see the two leverages are the same. They are the same. Good. So the first strategy, we use the hedge mode for what? For signal. Then the second strategy is what? When you are losing, instead of you to pump in more money for the trade that you are losing on, you can what? You can short it in the opposite direction. And that means that when it further dips, you are what? You are not affected by that further dip. So until it gets to a point where you believe that there is what? A possible reversal or a zone that you are interested to buy more, you close the one that you don't like. Then you what? You enter with what? The one you want. Then you what? You wait for your trade to go in the direction as you are what? You are expecting. Now take note. You can increase the funds of the two direction, and it's also another trading strategy. And with this one, you are expecting to make what? Profits or loss. You are expecting to make profits or loss when one fund is what? Higher than the other. When one fund is higher than the other. So let's say in this trade, let's say the short is losing, and you think that if you go long, you will make more money. If you go long, you make more money. So all that you have to do is what? Is to go and top up your what? Your long. So you go and top up your long. Let's say that one too, we are going with what? 10 USDT. 10 USDT. So we are topping up the long. And look, we have increased the long. And what? We are leaving the short. So in this case, if it goes, the long continue to move up, you are actually going to what? Make extra profit. You are actually going to make extra profit. Don't forget the percentages has changed here because when you topped up the long, you have what? You have changed your position and push it a little bit upward. And so when the markets come to that position, meaning you are going to also record loss. You are going to, this is the new position for your long, and this is what? The old position if you were to use the same amount. So meaning you have to be careful at this point. Why? Because if the market drops to this place, you record loss from here. You record loss from here. So it's only your short position that will what? That will cater for what? For this. That will cater for this loss. Good. So with this strategy, you are going in for what? For a profit. So if you close both trade, here you are getting profit. Why? Because the direction or the long which is giving you profit is having what? A higher funds as compared to what? As compared to the short. And this time you are recording profits and not what? And not loss. So if you close it, you close it in what? In a realized profit. What you have to take note is that immediately you increase the value or you inflate the value, you have to check your what? Your entry and know where you put your stop loss, or you know where you take your profits. Know where you take your profits and know where you put your stop loss. So these are the three strategies that I want us to learn using the hedge mode. Using the hedge mode. So the same way, another one is if you want to, let's say you are going into a loss, just like this gala, the short is going into a loss, and now you want to hedge it and recover, but you know that it will go up more. This time, all that you do is that you inflate one, the one which will give you profit. You inflate it in such a way that it will be maybe 2 times higher than the one which is already giving you loss. So if that goes in that same direction, or it continues with that direction, you what? You are going to what? Quickly recover the loss. Then when you break even, you move out. When you break even, you move out. So with the hedge mode, even though you can use it and it will give you unrealized profit and loss, with these extra strategies, you can use the hedge mode to make profit. You can use the hedge mode to make profit. At the same time, defending what? Defending your trade. Defending your trade. One of my strategy is that when I am trading with the hedge mode, for example, if I want to long, I'll put my long position. Then where I want to stop loss, of course, I won't make the margin so great that I'll be losing much. But then, let's say if I am going for 10 USDT profit, I'll say if it dips and I am losing 5 USDT, that will be my stop loss. I'll put a hedge trade, which is short. I'll put it there. So here, there will be a gap between what? My entries, just like what we are seeing here. There is a gap. So the two will have different entries altogether. The two will have different entries altogether. And so when I put that short, immediately it dips further, the The loss will continue to be my 5 USDT. The rest of the dip will not affect my trade. It will not affect my trade, and I will make what? I will make profit whenever it reaches my what? My zone of interest. My zone of interest. Okay, so without wasting much of your time, this is Trade Mastery Academy. We try to what? To help everyone know how to take advantage of the market. So the video is sponsored by Trade Mastery Academy. And so we try to teach you, give you the best tutorials, the best trading tools and materials that will help you to make profits on your trades. We have a Signal group. You can subscribe for our VIP Signal groups. Then you can also enroll for our Trade Mastery courses. Trade Mastery courses. We also have graphic designs. So you can also enroll for graphic design course, and Trade Mastery Academy team is going to help you. So today we learned what? Hedge trading, and what? The various techniques that you are going to use to hedge your trade. All right, so we will end the video. Before, if you haven't subscribed, please subscribe to the channel, smash the like button. Let us see your comments and we will address it. Thank you.